Communications and Multimedia Minister Datuk Saifuddin Abdullah has cancelled his order to award portions of the 700 MHz band to 5 companies. In a statement today, the minister said 18 instruments, including ministerial orders and findings regarding the usage of spectrum frequencies in the 700 MHz, 900 MHz and 2600 MHz had been presented to him. He said based on technical issues, laws and the need to follow a clear process, he has ordered MCMC's chairman to cancel the award and to re-evaluate the instruments with immediate haste. The minister's order to award the spectrum was made on May 15th. His announcement comes after the EdgeMarkets.com reported yesterday that Digi.com, Maxis, Telekom Malaysia, Axiata Group and Tan Sri Syed Mokhtar Al-Bukhari-controlled Altel Communications had been awarded the licenses. Previously, the MCMC had indicated that it would adopt a consortium license for the 700 MHz and 3.5 GHz bands, with the license to be awarded by an open tender. One in 5 Malaysians surveyed by recruitment agency JobStreet have lost their jobs due to the economic impact of COVID-19. Most of the retrenched employees comprise the less tenured, low-income workers and part-time employees in small organizations. They are also largely from the tourism and travel, hospitality and catering, mass transportation, education and retail industries. JobStreet said in a statement today that its study also indicates 35% of Malaysians have experienced a salary reduction of more than 30% during the movement control order. Meanwhile, 54% are actively searching and applying for jobs. According to the Statistics Department, unemployment in March rose by 17.1% year-on-year to 610,000 people, for a jobless rate of 3.9%. For the whole of 2020, it said the country is projected to record an unemployment rate of between 3.5% and 5.5%. The Malaysian Employers Federation is less optimistic. Its executive director, Datuk Shamsuddin Bardan, reportedly told The Sun Daily that Malaysia is likely to see its jobless rate hit double digits if economic uncertainties continue. The organisation warned last month that some 2 million workers could be retrenched just after Hari Raya Aidilfitri as companies struggle to cover their overheads. The FBM KLCI continued to rise for a 6th straight day to a 4-month high on buying interest in battered banking stocks that carry large weightage on the benchmark composite. The CI climbed 30.84 points or 2.05% to 1,538.53, the highest closing since February 14th. The selling wave that swept across the rubber glove sector did not seem to have dampened local sentiment much after stockbrokers tightened margin financing on glove makers. Malacca Securities senior analyst Kenneth Leong told the EdgeMarkets.com that buying interest turned towards financial stocks amid their attractive valuations. Gains were also underpinned by the anticipation of the short-term economic recovery plan for June to December 2020 that is scheduled to be announced this month. At the same time, the stronger commodity prices and firmer ringgit against the US dollar also provided a boost. Trading volume remained high at 9.42 billion shares today, with trade value totaling 7.02 billion ringgit. Gainers outnumbered losers by 560 to 445. Banking stocks, which have been bashed down to at least 10-year lows in terms of price-to-book valuation, dominated the gainers list. Public Bank soared 11% to 17 ringgit and 38 cent. Maybank gained 6.3% to 7 ringgit and 98 cent. RHB Bank jumped 7.9% to 5 ringgit 35 cent, and Hong Leong Bank rose 7.3% to 15 ringgit and 2 cent. Leong adds that should the FBM KLCI remain above the 1,500 level, there should be more upsides taking place over the near term. M Investments Bank, CGS, CIMB Securities and UOB Kay Hian Securities Malaysia have tightened their share margin financing standards for shares in rubber glove manufacturers following the recent rise in their stock prices. The share margin financing valuation changes involve shares in Top Glove Corp, Hartalega Holdings, Kosan Rubber Industries, Supermax Corp, Adventa, Comfort Gloves, CarePlus Group and Rubberex Corp Malaysia. M Investments circular shows it has capped the share margin financing valuation for Hartalega at RM6.09, Top Glove at RM6.21, Kosan at RM6.07, Supermax at RM4.37, Adventa at RM1.57 and CarePlus at 36 cents. Meanwhile, CGS-CIMB's circular shows that it has limited the share margin financing valuation for Hartalega at RM9, Top Glove at RM11, Kosan at RM7, Supermax at RM5, Rubberex at RM3 and Comfort Gloves at RM2.80. At UOB Kay Hian, the financing threshold is set to a 35% discount on the latest closing share prices of Hartalega, Top Glove, Kosan, Supermax, Rubberex, Comfort Gloves, CarePlus and Adventa. UOB Kay Hian also issued a mandate on its normal share trade accounts where any transaction of rubber glove shares in excess of RM100,000 must be fully covered by cash. Proton Holdings sold 5,676 vehicles in May, down 46.5% from 10,611 units a year earlier, as Malaysia's national car manufacturer contended with challenging market conditions arising from restrictions and movement curbs due to the COVID-19 pandemic. May's figure is an improvement of 73.2% from March and accounts for an estimated market share of 23.3% in the local automotive industry. Year to date, Proton's volume fell by 23.3% for the first 5 months of the year, compared with the total industry volume decline of 48.7%. It remains Malaysia's second most popular car brand, with a year-to-date market share of 21.1%, which is in line with targets set for the year. Going forward, Proton CEO Dr. Lee Chun Rong says that while it will take a few more months to get an accurate reading of market conditions, the car maker is quite confident of seeing steady growth for the rest of the year.